What's up, guys? Chimp here with another market update. And, it's been a couple days since we topped. I figure, or I shouldn't say topped, but printed our last local top. And I wanted to go over, what I'm seeing, where we're at, sort of like what I'm thinking, and yeah, go from there. And I should say, times like this, it's very hard to be like super, super precise. And clearly, like I've been wrong. Um, the last couple weeks. But yeah, let's go over everything. I'll sort of give my thoughts, and then and then I'll sort of. There's a couple of things I want to talk about. And once again, like if you guys have any comments or feedback, if you think I'm totally wrong, or if you have questions, just leave it in the comments. Happy to answer at anything and everything, basically. Okay, so Bitcoin is at 118,500. And so what does that mean? Well, we pumped to 123 a couple days ago. We had a pretty big pullback to about 116. That selling got absorbed. We pumped to 120, sort of pulled back to 118, and basically have been consolidating here. I mean, really, since last Thursday, besides like the pump to 123 and I guess the dump to 115.5. And so the question is like, what is the market going to do? And I remain super cautious here still. I think that there are a lot of sort of like, if not red flags, like major warning signs. And maybe I'll just go through them one by one. Like let's just start off with something simple. Global open interest. Global open interest is now at 94 billion. We've now surpassed the peak of global open interest since the top in December. So leverage is being built up. Global open interest is up like 25 billion. I know there's some unit bias there, but basically global open interest is up 25 billion since we pumped. 25 billion, depending on sort of like where you're benchmarking it from. It's basically doubled off the lows. And again, like this sort of comes back to like this whole psychology and narratives, and I'll talk about this in a second in terms of like this Minsky moment, which I think like crypto is basically a repeat, it's like a Minsky moment cycle almost. And so I'll get to that in a second, but look, leverage has rebuilt clearly, right? And you can see it in the funding rates. Like I don't have the funding rate chart on one of these tabs, unfortunately, but you could see it in the funding rates. Like pick any altcoin, like funding rates are many multiples of baseline on a lot of these alts. So like all these alts pumping. And so I guess that kind of leads me to the second point, which sort of links in with this first point here, which is all these alts have been pumping. And the issue with that, and by the way, like you're getting these like ICOs, like, pump fund 1 billion ICO, like, first of all, ask yourself, like, do you see a rally like this at lows? No, you don't. Like, do you see people being able to fundraise like that at the lows? No, you don't. So, like, what we're seeing is sort of very, it's clearly frothy. You have everything going up. Like, again, you have ETH going up. I think ETH is sort of an exception. XRP, like, literally pick any coin. It's up, right? Like, Bonk is up. Like, again, like, coins are just flying off the shelf. Like, even like the grifts, right? Melania is up. Like everything is up. Everything is up. Everything's one way up only. Pullbacks are shallow to non-existent. But again, like this is why, like, what would I consider a healthy versus unhealthy rally? If this was a Bitcoin-led rally, like if Bitcoin was pumping here from 100 to 110 to 120, and like alts were sort of chilling, like maybe you had like outliers that were pumping, but for the most part, like alt to BTC ratios were sort of getting crushed. Like I would say, yeah, this is actually probably like very sustainable, like actually like super sustainable. But when alts start going freaking bananas, like again, like, and I'll show this historically, like this is usually a time when and you can see it in the leverage, you can see it in multiple places. Like this is when you want to be a bit more cautious, and like we've seen this twice before in the last like 15 months. Like in that March of 2024 pump, like alts went freaking bananas, right? Like you had crazy shit launching, like Book of Meme, all this crazy shit was launching, going up only, like, and alts started pumping, let's just say maybe around 65K, and yeah, Bitcoin went all the way to 74. But ultimately, like, if you sold between 65 and 74, like, you had many opportunities to buy lower. Similarly, like, alts started going freaking bananas as Bitcoin, basically got above 90, like, once Bitcoin hit 90, 95K, like, alts started going crazy. And, like, yeah, we pumped all the way to 110. But basically, if you sold, like, you could have bought any of these sort of dips that we had in December, January, and you got an opportunity to buy significantly lower in, like, Feb, March. So again, like, what are we seeing? Like, alts are going freaking bananas. Everyone's speculating on this shit, and leverage is going up. It seems like it's a one-way up only market, and that concerns me. So that's like one of the major factors here. Now, obviously, we've had ETF flows basically go bananas, right? Like ETFs are continuing to inflow. It's been up only. You know, I don't even think this is necessarily like, oh, this is mass adoption or something. I actually think at this point, like, a good portion of this is just speculative capital. And my worry is that at some point, whether it's because Bitcoin goes down or because TradFi goes down, some of this capital will exit. And we saw, like, when 5 billion of capital exited in Feb, March, like, we dumped a lot, right? Like, what happens if 5 billion exits here? Like, like, again, it's all reflexivity, right? Like, what happens when that reflexivity switch flips? And this is why, like, again, what's one of the reasons we've been going up? Like, let me just pull up NASDAQ futures here. Like, it's because the stock market, since the lows, has been up only, right? And at some point, this thing's going to pull back. Maybe it's going to be a smaller pullback. Maybe it's going to be a larger pullback. Who knows, right? But at some point, stocks will have some sort of pullback. Again, whether it's like 5% or 10%, we know, like, mathematically it's very likely going to happen. So, or not mathematically, it's like it's guaranteed, like, whether it's from this 23K level or 24 or 25 or whatever, like, at some point in the next few months, like, stocks will likely have a pullback. And so, again, like, when you look at sort of everything in this grand picture sort of thing, I'm getting a notification that Capo just made a new post. Again, like, reflexivity is pushing the price, like, everything's sort of pushing towards the price going up, but underlying that is like a big current of leverage as well. And again, like, a couple other points actually I want to make too. Again, I'm sort of all over the place here. Sorry, I'm running on like super low sleep from the last few days. What are some of the other things? Sorry, I lost my train of thought. Let me see if I can get it back. Okay, two things. One is I'm seeing people say, like, yeah, the golden bull run's starting now. Dude, the price is almost 10x off the lows. You can go back to my Twitter when Bitcoin was at 20K and when Bitcoin was at 16K, like, especially, like, I was so bullish, and I've been basically bullish most of this ride. Like, I was bullish up until we got sort of in the mid 60s in March. Then I flipped bullish again, like, once we started wiping out a couple times. Like, my thesis was that it was consolidation to go up. I got bullish in the mid low 80s, basically. When we pulled back, you can go read my tweets. You can even go watch my videos, right? Like, you can go watch the videos I posted a few months ago. Even at we pumped to the mid 90s. I was like, look, I don't know if there's many sellers left, and then we pumped to 105, right? Like, so when prices are depressed and it's looking like people aren't leveraged, and there looks like there's a large amount of capital waiting to buy, like, quote unquote, the next dip, which never materializes, like, that's when you have, like, outsized risk reward. Like, the risk reward here is so bad. Like, yeah, Bitcoin could go to 125. Yeah, Bitcoin could go to 130. But guess what? Like, 5 billion in ETFs outflow, and then you have, like, some other people selling as well, and the price can easily go back down. And one other thing I'm concerned about, let me see if I can find this. Let me see if I can find it all. You can go look for it. It's like I think it's on Coinbase's Twitter, basically. But It's not on their Twitter. It's on one of their like maybe it's like not on the Coinbase one, but maybe it's like on Coinbase Lending or I don't know. But anyways, there was a tweet I saw which said like collateralized Bitcoin loans on Coinbase pass a billion, and this is like the exact thing I was worried about, and this is sort of why I think there's a decent chance this is actually sort of like a cycle top, or we're getting into that range because I think the fraud cycle always lags the price appreciation. But I think we're sort of at this point where like you have so many grifters in this space, so many people in this space that are like flooding it, and there's like a big parasite class, and also as a result of that, there's probably a lot more shadow leverage than we realize. And this is a mistake I made in 22, was I thought like, hey, Bitcoin dumped from 69 to 33, like this is a pretty freaking bargain price. Bitcoin dumped to 25.5, like this is a bargain price, but I didn't realize the level of shadow contagion that built up as a result. It wasn't from the first leg up, right? It wasn't from the move to 65. Like, again, I'll sort of pull this chart back up. I don't know if we can load it, but the shadow leverage that built in 2021 was not because of this move. The leverage all got wiped here. The shadow leverage that built up was because of this range. This is where all that shadow leverage built up. That's where people like doubled down on their convictions. And that's what caused we had like sort of one leg of deleveraging, and then we had like subsequent ones as a result. And I remember like thinking when like, again, I'm sort of dating myself. I'm all over the place. You want to tune out at any point, go for it. I'm sort of ranting as well. Go back and look at Bitcoin. Like when it dumped to 43, like almost all the centralized exchange leverage came out in December of 2021. But what we got were subsequent like weakness and dumps. And again, like consolidation, but then like another dump, right? Like Luna blows up, and then 3AC and Celsius blow up. Like all of this was sort of, in my opinion, like these legs down are all shadow leverage. And my worry is like, again, all of 2023 was healthy. 2024, you had some pockets of froth, but that froth quickly wiped out. I think like where the real mania and like fraud sort of came into this market was like basically post-Trump. And my worry again is like, here we are now sitting at 120, like there is probably a huge ass parasite class. There's probably a huge amount of shadow leverage. Like who knows how many of these Bitcoin collateralized loans there are out there, etc. And it's sort of like the perfect narrative, right? At the lows, people were saying don't buy because of the macro, don't buy because of contagion risks. And now it's the opposite, right? Like all the ETF flows look great, right? And by the way, we've seen this. Like we've seen ETF flows look great for a period of time, and then like they slow down, right? And then the market dumps out. And this happened like multiple times in 2020, like end of 2024, early 2025. It happened a lot of times, like sort of mid 2024. This is not a effect that we haven't seen before. Like we can look historically and like point it out that, hey, this thing has happened. So I don't know. Again, to me, like going on a bit of a rant, and I sort of want to talk about the Minsky moment thing actually. So I pulled up Wikipedia. So I'm just going to read the hypothesis, and then I'll sort of skip here to the Minsky cycle. According to the hypothesis, rapid instability occurs because long periods of steady prosperity and investment gains encourage a diminished perception of overall market risk, which promotes the leveraged risk of investing borrowed money instead of cash. The more general concept of a Minsky cycle consists of a repetitive chain of Minsky moments. A period of stability encourages risk-taking, which leads to a period of instability where risks are realized as losses, which quickly exhausts participants into risk-averse trading, deleveraging, restoring stability, and setting up the next cycle. Think about what happened end of last year, beginning of this year, and then March, right? You had this Minsky moment where prices pumped, then they washed out, people got very risk-averse, and then we pumped again. And now, like, where are we again? Like, based off all the data that we can look at, like, it should be clear, like, leverage is up, everything's sort of risk is sort of like one way on, and like in my opinion, like we're at the tail end of another Minsky cycle. But in this case, like again, I think like there's been enough time to where there's a decent chance you have this mega fraud cycle that's built sort of underlying this asset class. And I'm very worried for what the next, like when we washed out here, I was pretty confident based off the price action I was seeing and all the data I was seeing that like 80K was a fantastic buy. Like you even had the technicals, like I even pointed this out sort of on some of my videos. I think like you had the technical bounce area and everything and blah blah blah, whatever. Um, I don't know this time around. I don't like if you were to sort of ask me what are my sort of scenarios. I don't know. I think this is, I really think like if we do start to dump, and again, I could be wrong. Maybe we just keep going up. Maybe this is a new paradigm. We go to 200 and 300 and whatever, and I could be totally wrong. And this is like basically like free wealth for everyone. But I don't know if you want to buy a dip. Like, who knows? Like, you might get a dip and the leverage wipes out on centralized exchanges. And then you get like a 2021, 2022 repeat moment where like you actually have shadow leverage that starts to come out from different places. And by the way, like also like one other thing, look at all the extractionary behavior, right? Like pump fund. This is extractionary as behavior. Look at Trump meme coin, right? This is what I mean by parasite class. It's that the level of extractionary behavior sort of like increases and increases and increases. And by the way, that's evident like that's the opposite at the lows, right? When FTX blew up and then you had like the initial contagion finish, like there was basically like no one left in this industry. Who needs to sell crypto to keep paying their bills? Like not maybe ETH Foundation? I don't know, like not that many people. Uh whereas now like you have all these projects, all these companies doing crazy ass shit, like all these places having their like little crypto treasuries and whatever. Again, like my gut feeling tells me that we're a lot closer to a top than not. I could be wrong. Like if you keep getting like Goldilocks scenario for another month or 2 months, like yeah, probably price is higher. But I feel like given the leverage, given everything else, there's a lot of risk in this market. And I'll end on one last thing, which is I was listening to some Taleb today. This is sort of like what I like to do. Sometimes I'll just go and listen to, and sometimes I'll just listen to the same thing that I listened to like many months ago because you miss things. And just listening to like one of these Taleb talks, and usually he's a little bit more vague and more broad and not really directly applicable to crypto. But he made a good point, and it has everything to do with like expected value and probability and whatnot. But he said like, you know, if you look at he said like I think odds are more likely that we go like when he was trading. There's like a specific moment, and he's like, hey, I think odds are more likely that we go up than down, but I'm short because the payoff is so asymmetric to the downside, right? And that's like where EV comes in, right? The probability that we go up, let's say it's 60 or 70%. Maybe your upside's again like some amount that's nothing too crazy, but then if we go down, like your downside could be significant. So anyways, like, these are sort of just thoughts and a bit of a rant video, I would say, almost. But we'll see what happens. I mean, I have no issue coming out at the lows and telling people I think Bitcoin's cheap and I think risks are asymmetric to the upside. And like I have no issue coming in here and being I don't want to say bearer of negative news, but sounding the trumpets and saying like, look, like I think risks are actually significantly elevated here. And so ultimately the market will sort of tell us whether I'm right or wrong. But given the breadth of this pump, given everything, like I don't even know if you want to buy a dip. Like maybe you buy a dip and you exit or whatever. And anyways, we'll see what happens. If you like the video, again, feel free to leave a comment. I do read them all. I'm trying to put these out a bit more regularly, especially now that there's like so much market volatility. And look, I guarantee you there will be a day where I come out here again and say I think Bitcoin's cheap and you should buy. Just not today. So anyways, guys, appreciate you listening to this and take care.